Hello, today is Friday. It is almost 1:30, 1:29 on Friday, not quite the close. Today's title of the market commentary is When the Wind is at Your Back, Do Not Fight It. Friendly reminder, this video is for informational purposes only. We're going to get into the charts to give you a glimpse as to what we're seeing. Obviously, we're seeing some volatility today, and a lot of decisions could be made prior to close. That will be notated in the actual commentary itself. But I want to show you breadth, which will not change significantly by the end of this close. So just want to keep you aware of what's going on, and we'll go from there. A friendly reminder, this is mainly for clients specifically because they can see their accounts. One thing specifically for clients is this. One thing that you may be confused at when I say, hey, you're 100% invested, and you're looking in your account and you're like, hey, about half of my account is in cash. What's going on there? Well, the new trading strategy is basically so I can keep movement, keep cash available. So for example, let's say you had $100,000 in your account and I'm betting on the index, the S&P 500 2 times. 50% of that, you are 100% invested, but I have cash in case I sell and need to get back in quickly. I don't have to go into margin to do that. So I'm basically using leverage or 2 times leverage product. So again, you have $50,000, 2 times that is 100% invested. So most of my clients are 100% invested at this time. That could change by close. We're at a key level right now. In fact, I'm watching 45-30 very closely. I think that's very important. Obviously, it's been an amazing trend for about 2 weeks. Haven't seen much of a dip until today. Jerome Powell, Fed speaker, spoke, caused some jitters, but it did hold key levels and went to, I believe, about 45.24, and it bounced right where it needed to. So for right now, the wind's behind us, and we have to be real about that. I'm sure there's always concerns with inflation and all sorts of other things, but price action thus far has been very, very good. And that could change by the close, but as of right now, we're hanging in there. So these are the key levels that I'm watching. This will be updated for clients by the close. I do think that we did touch very close to 45.63. We hit 45.60. Very well could potentially with some momentum get 45.70. I don't know if that's going to happen today, just not seen it. But one thing that's kind of keeping me in is the strength in the Eurozone. All week the Eurozone has been consolidating, going sideways, which truthfully I wish we had done in the United States to make this move more substantial and probably stick longer. But so far, we've had every pullback when we've needed to. So to clean up the chart, just so you're aware, it is basically a V up. Usually when you touch all-time highs, you see some consolidation just like here. But, let's be real about this. A lot of people in the news are saying how rare it is to get a V up, and it's not true. This entire year, every time once we've either touched the 50-day moving average or finally went below and above the 50-day moving average, which was this case, below the 50-day, which is the blue line. And once we got above it, it was a rocket ship, right? A lot of people use that as an indicator. So we have to be real about it. All year, every time I touched it, boom, boom, boom. Finally went below caution, which we did very well this time. Again, candidly, I need to do better, and I have a lot of work to do. But this one we did very, very well on. So we'll look at breadth indicators now. Just want to keep moving and keep you aware. The tables have turned for a while since March. That dip that we saw where it seemed like large cap could do no wrong, where a lot of other names were just getting spanked. So breadth was horrible. But look here, all the way back to April, May, we went sideways for a long time. And this is the QQQ, which is the NASDAQ, more tech related in relation to bonds. You want to see this trickle higher, and it is. So that's very good. So we're seeing continually good things. This was the trend line for a long time that we could not get above. RSP is equally weighted S&P 500. So 500 are the largest, strongest stocks in the United States, equally weighted. So each stock has the same weighting. The S&P 500, for those that don't know, 5 stocks make up much more than their normal weighting. All of the stocks in RSP are equally weighted. So it truthfully shows a better indication of how well the entire market is doing. Okay, so this was a trend for a long time, and this is what I've been saying for a long time. Hey, this is ugly. This breadth is horrible. Meanwhile, the S&P 500 was doing fantastic because many of the big winners, the big stocks were doing fantastic, but not everything was doing well. Finally broke out of this trend, went sideways, and obviously the dip in September and October, and it has been improving. Now we have kind of a new trend line here, kind of interesting, that I just added today to say, hey, this is kind of interesting here. We did stall here. It'll be interesting to see what happens around maybe the 5 or 10 day, but just keeping an open mind here. McClellan index. This is something that worried me for a long time. Look at the divergence that we had seen for months. Trickling down, trickling down, trickling down, which is not good. This is, again, a participation breadth indicator. Finally curled up. So the wind is behind us. Many more participating stocks. So this is good. So I do think that this can continue for a while, and seasonality does continue into November. Now, we do have a Fed meeting November, and that's going to cause don't be surprised to see some volatility then. But as of right now, we're hanging in there, and price is suggesting good things at this point. And again, that could change quickly. If we lose 45.05, I think that's going to be a little bit of a short-term issue, okay? 45.30 is more short-term, probably test 45.05. So another sentiment indicator, the National Association of Active Investment Managers, or NAAIM. You can see that people are pretty heavily invested. You got to be cautious here. I'm well aware that short-term we are overbought, very much so. But one thing that I've done horrible at all year is not holding long enough. And I'm going to be a little more reactive to when we actually start seeing dips. Today might be that day. I haven't quite seen it yet, but I will be open minded to that. Put call ratio. This is in the range where, like in the 40s, where we start to see complacency. Now, this is as of Thursday. I would not surprise me if this is going up a little bit because people are kind of hedging at all-time highs. But it's just kind of showing, yes, things are complacent, but it doesn't mean we can't go higher. I've learned that the hard way this entire year. The divergence checkup. S&P 500 percentage of stocks above the 50-day moving average. Finally getting out of this downtrend. Again, wind behind your sails. We had this little downtrend here. This was the breather. A lot of stocks participating now. The divergence checkup again. A more in-depth version. Uptrend. While this was my worry for months. Look down. Everything was down. Percentage of stocks above 50-day moving average. Nice above 50-day moving average. It was ugly. Now getting the participation that I've wanted to see for a while. Think this can continue, and seasonality-wise, again, it's not a guarantee that just because seasonality looks good that it continues, but objectively, usually this next week has some rocky tests. Okay, that is seasonality from a seasonality perspective. I think we have one more chart, and then we'll end it there. Percentage of stocks above the 200-day moving average. Definitely improvement here. This little curl up right here. So NASDAQ also improving here. So we still have plenty of work to do. It doesn't mean we're not going to see 2 to 3% dips in a week. That very well could happen because we have plenty of gaps to test, and we need to be objective of that. Again, this is good though. We're holding key levels right now, which is good. But if you don't know what a gap is, it means a move was made overnight, okay? And the S&P 500, this particular ticker will show you the gaps, and that's right here. There's actually one here that I think we may have actually tested. But the orange right here is showing gaps where we went up overnight. And usually those do get tested, but it does not have to happen right away. We've seen that plenty of times. And if this would be one of those times where we finally get breath, seasonality, where it might not be tested for quite some time. So we'll see. I'm going to remain open-minded to ignoring these gaps. They do not have to be tested. We are finally seeing participation in a large number of stocks, which is fantastic. I'm not overly bullish. I'm very reasonable to say, hey, it would not be surprising at all to test right here. Or even the bigger one, which usually you test a little bit more, but Monday we did test, not Monday, but we did see a nice test on Monday. I wanted to see a gap down. We saw it, and boy, was it bought quickly. Mercy. So that's all we got for today. I hope you have a great weekend, but just wanted to keep you aware of why you might be looking in your account saying, hey, we're not 100% invested. You're saying we are, but we're not. Just because there's cash in your account doesn't mean you're not 100% invested, because I'm using products that get you 2 to 3 times invested. So most clients were a little over 100% invested, but I do that and have cash available in case I either need to hedge, so protect downside, or add more if I want to. So we're not doing anything crazy here. It's earnings season. As you've seen with some names like a Snap, a Facebook, a Twitter, you can get drilled this time of year. And so I'm trying to remain optimistic and be involved while not getting killed at times like this. Those are rules for me. When we're this high, I got to be careful on individual names. That's just, as an investment manager that manages a decent amount of money, that's the choice, because we can move the market. So hope that helps. Have a great weekend. Thanks for your trust. We're making progress, not to be cocky. We have a lot of work to do. Thanks, guys.